Big part of the problem today, the strengthening dollar, the greenback rising 1.1% to a 12-year high against the euro. And there's a powerful force driving the dollar's dramatic move, diverging central bank policy. As the U.S. economy strengthens, the Federal Reserve is expected to hike rates, possibly even as soon as June. Now, that pulls investment flows into the U.S. The European Central Bank going the other way, buying bonds, flooding the market with euros, thereby devaluing the currency to reduce borrowing costs and stimulate Europe's economy. That's the mechanism. And the dollar isn't just rallying against the euro. It's seeing strong gains against a handful of other major currencies, including the yen, the pound, the Swiss franc, and the Russian ruble. Bob Pisani now with a look at what this all means for investors like you, for stocks, and for corporate earnings.
The markets were obsessed with a stronger dollar today. The source of that concern is fairly obvious. The Fed unwinding their stimulus program is the main catalyst for the rally in the dollar. Now, the fear is that stocks could be next. The obsession isn't surprising with the dollar. Roughly 46% of the sales of U.S. corporations come from outside the United States. A strong dollar stifles overseas earnings growth. Now, we don't have really good numbers on the impact of a strong dollar on earnings because companies aren't required to report that. But enough have to indicate that the strong dollar is definitely an issue. For example, Abercrombie & Fitch said foreign currency impacted earnings negatively by 3% in the last quarter. Fastenal said a strong dollar lowered daily sales growth by 1%. And Gap said currency effects took 6% off of earnings. All told, about 20% of the companies in the S&P 500 said the stronger dollar negatively impacted profits in Q4. And this isn't over. Most believe the dollar's rally will continue. But let's not kid ourselves. The story that the dollar's rise is a disaster for U.S. companies is being wildly exaggerated. Lower rates, which we're seeing in Europe, are great for U.S. corporations. And there are other ways U.S. corporations can offset the effect of a higher dollar. For example, many companies are now issuing debt in euros instead of dollars, which dramatically lowers their borrowing costs. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.